And good morning to you guys. It's hoodie weather here in Cleveland. It is freaking cold, but Fed's gonna be talking today. Futures are up. Let's see what happens. All right, guys, let's do this. So futures are up a tick. Jerome Powell is going to speak today at 2 o'clock. The Fed notes are going to come out at, at 2:30. The Fed notes are going to come out at 2 o'clock. So we're going to see what happens with that. Everybody's saying that they're going to start doing the taper of mortgage-backed securities and treasuries going November, December sometime. They're coming out with the dot plot today, which is the basically the plot the 19 Fed presidents put together and their path to raising interest rates. So we're going to see where that goes. The most I've seen is it's going to go up 1.25% by the end of 2024. I've also seen 0.25% by 2024. So who knows where interest rates are going. It was really good having Jimmy yesterday. He's an awesome person. I've been texting with him this morning. He is just a great guy. Keep a watch on his channel. Paul and I were talking today also, and it's just so nice to have somebody that is like-minded in this YouTube space that is not an idiot, for lack of a better term, because that's pretty much the only term. So let's get to some stories. I'm interested. Potato always talks about the interest rates and how the treasury yields and how I always look at them. I mean, these are interesting. The yields are starting to tick down a little bit. The 10-year is not projected to be over 2% until the end of 2022, which is insane to me. But hey, that's what you have going on. Gas prices have doubled overnight. Listen, gas prices here are $4+ a gallon. I know in California they're already paying $5+ a gallon. That's what you get. All right, let's see some stories here. What do I want to start with? Let's start with the Fed stuff. Why not? So, futures are up. Keep a watch on a couple things. I know Disney came out yesterday during the live stream. They were down almost 4% basically, because the CEO came out and he said that Disney Plus is going to start to the Disney Plus subscriptions are going to start to tailor out. Now, let's use some common sense here. This is why I don't like the way the United States reports things, because it's on a quarterly basis. Disney Plus came out, and then coronavirus happened. So subscriptions exploded, probably bigger than they should have. Let's look long-term at Disney Plus. Are people going to are kids not going to, I mean, Disney is going to be around for a very long time. Jimmy's huge into Disney, and he's like, I don't care what happens to Disney. He said, I would have mortgaged my house if my wife would have let me when they were around $80 to $100 a share. We need to start looking, I wish these companies and these analysts and stuff would start looking at things more long-term than the quarter-to-quarter jumps and dips of Disney Plus subscription. I know for a fact that Disney Plus 5 years from now is going to be bigger than it is today. As far as content goes, as far as subscribers go, as far as everything goes. So this nonsense about knocking them down 3-4% right now, I don't think they should be at these levels in the first place. But that initial reaction, what a joke. FedEx, also the thing that's happening with Disney, they're having production delays from inside of their studios. FedEx is also having supply chain and labor shortages, and that's why they are expected to post weaker earnings. Keep an eye on FedEx too, because any company that does shipping, if we get any kind of recession going on, which absolutely should happen, we should probably have a depression. These companies are going to get hit because they're not going to be shipping. They'll be shipping stuff to company, but they're not going to do company to consumer as much if people stop purchasing, making online purchases. And we've seen that spending is way up. Monetary policy statement and subsequent press conference from Fed Chair Jerome Powell is Wednesday afternoon, 2:30 p.m. Expected to lay the groundwork for a near-term announcement to start tapering during the Fed crisis era asset purchase program, which is $120 billion, as we know. I think this is from Julia Coronado. Let's see. She actually made some pretty good quotes here. I think on the balance, the Fed is still marching forward. They're going to tell us they are about to taper this year. Their plan is to taper this year. If they do any taper, I think it's going to be like $10 billion a month. And that's a drop in the bucket. That sets up a November or December formal announcement. So this meeting is not about doing anything. It's to remind us that the economy is making progress, even though we have 10 plus million jobs out there and nobody's going to work. And the recovery is underway, and the Fed is beginning a very gradual process of normalizing, as they like to say, monetary policy. Okay. And on the dot plot, we expect to see rates more likely to rise for the first time in 2023. I do agree with that, and I still think it's going to be like a quarter point, which is nothing, but oh well. Let's do this Evergrande thing. So this Evergrande thing, guys, smash the like button for me. This Evergrande thing is very interesting. People have been saying, is it the next Lehman Brothers? This guy makes some pretty good arguments that it's not. I have no idea if it is or it's not. All I know is this. Debt matters. I don't care if it's corporate debt or federal debt or state debt or personal debt or any kind of debt that you can come up with. Debt matters. And at some point, debts need to be repaid. And taking out cheap debt at a gamble that it's going to stay cheap is not a good idea. And in China, building ghost cities clearly isn't working. So putting people to work to have people go there to have nobody go there and not pay for anything, it obviously doesn't work. So for those of you that don't know, I'm sure most of you do, China, this real estate developer Evergrande over there is saddled with $300 billion of debt that they can't pay. I think it's due this week or next. It sounds similar to the situation that happened with Lehman Brothers, but this person makes the argument. He says, as of now, I would say this is, I would not say that this is the kind of thing that has potential for a global contagion the same way as Lehman Brothers back in 2008. Remember, banks and brokerage firms like Lehman was interlinked and in ways that we can't see with high leverage. This is a high leverage real estate developer. So I do understand where he's coming from, but at the same point, debt matters. I was making markets in banks and brokerage stock options during the financial crisis. I could not keep up with the volatilities high enough to keep us from getting short and in real trouble. That was not the kind of session we saw on Monday. There was a garden variety of type of sell-off. So his point is that it wasn't just one specific sector that was selling off. It was all across the board. But there was a lot of tech selling off though, and tech to me, I mean, you still need to pay attention to tech. Tech has been responsible for this massive ride up. It's going to be responsible for the massive ride down. Simon said, "Do I think it will hit Chinese stocks?" Of course, it's going to hit Chinese stocks. I mean, look what China did overnight. China injected $18.6 billion into the banking system overnight. So we're doing the reverse repo rate, and they're starting to do the thing they kicked it off with 18.6 billion. Granted, we're doing like a trillion or something like that. I don't know. I can't keep up with these numbers anymore. It's just like make believe at this point. China's central bank boosts its gross injection in short-term cash into the financial system after concerns over debt crisis in China's Evergrande group. The People's, I love how they call this, the People's Bank of China. That's anything but the People's. $18.6 billion into the banking system through repo purchases. The bank net injection is probably aimed at soothing the nerves as the market worries about Evergrande. While the aim may be to instill discipline, there's also a need to prevent contagion in the market from spreading like wildfire, because that would be a disaster for China. To be honest with you, it would be a disaster for everything. I'm selfishly hoping that this is kind of the thing that gets the ball rolling, but we'll see if that actually comes to fruition. Okay, next, I don't know what toast is. I really don't care. But my point of pulling this up, and I actually started to chuckle when I saw this morning. When's the last time you guys heard about like an IPO or a SPAC in the news? They have just disappeared. It was like every day we would see a SPAC, we would see an IPO or something like that. We haven't seen that for quite some time. Kind of all this hype stuff has been chilling out. Let's go to SPAC analytics. So this year alone, there have been 437 SPAC IPOs, 699 US IPOs. So out of all the companies that have gone public this year, 63% have been SPACs. And if we just look back to 2019, look how many SPACs we had. Yeah, it's nuts. It's nuts, but hey, that's the world we're living in. And the fact that we're starting to see this slowdown start to happen, it just tells you what kind of market we're in. We're in some craziness. It's going to at some point this is going to break, and these hype dorks are going to get wiped out. I'm telling you right now. But at the same point, toast is disruptive. Day traders, go and trade the hell out of this and go make some money and show these people how to actually make money. This is the Disney Plus story. I really don't need to read it. I pretty much said everything that I need to say. But guys, I think everybody, who doesn't agree with this? 5 years from now, Disney Plus is going to be bigger and better than it is now. Why are we fretting over quarter-to-quarter stuff? I just wish that the United States didn't report quarter-to-quarter. I just wish there was some way that we could change that, but we can't. So here we is. All right. 10-year, yeah, they said this isn't going to get above 2%. Let's see what's on the earnings docket. I know Nike reports tomorrow. Today we have BlackBerry after the bell. General Mills reported this morning. They're up 3.5%. Oh, let's see. Costco reports tomorrow after the bell. Let's see. Yeah, that's that. Darden Restaurants, keep an eye on that. CCL reports on Friday. That should be fun. Good old CCL. All right, guys, if you want to join us and our Discord with 6,000+ people, $7 a month gets you Discord access. If you want Discord access and software, $27 a month gets you that. If you want to join the Bid and Ask Nation with me, $77 a month right now. We talk trading, options, everything, but specifically the trading. And this is where you come if you want to do day trades, long-term trades, swing trades, what have you. $750 a month for a one-on-one session with me. I'm doing one at 10 o'clock this morning. And I know this person really wants to focus on day trading. He's a teacher, so he took the day off so he could do it while the market's open. So that's great, and that's going to be very beneficial to him. Every single person that's done that thing has gone on to do very well. Because you actually get to ask focused questions, and we get to talk for an hour. And if you want to do a real estate deal with Paul, $10,000 consultation for 4 hours. And if you're doing a big deal, probably a good person to ask. Let's see, futures are up still. Plunger team's in there, baby, but hey, I digress. What stocks do we want to do today? We can start with Disney. We'll start with Disney, and then Coco. Ask me that stock that you said I really can't remember. I told you I wasn't going to be able to remember. What was I going to do? Oh, Disney. Can't even remember what I was just going to type in. All right, let's see here. So Disney. So with this one, this is where stochastic is an issue, because yesterday you had this big fall during the day. And I mean, even today, it's up pre-market. It's recovering a little bit. But you fell below all four major moving averages yesterday, and you see how the stochastic just aggressively turned down. That to me is a little bit, like I just said, aggressive. I don't think it's going to work. Let this thing calm down today. We saw with Apple. Let me show you Apple real quick. Keep an eye on the stochastic. Apple. So that one, it did figure itself out yesterday, didn't it? All right, it's switched around. So with this crazy volume, the stochastics are getting messed up. But I think Coco wanted Lumen. Let's see what Lumen is. All right, so Lumen is actually looking pretty good. I like how this thing is moving towards the sweet spot, which is great. And it's holding the 200-day moving average pretty well. I don't think it's not ready to go yet. I would wait for this trajectory to start going and wait till you get in the sweet spot. As far as a swing trade goes, I would not do something like that. Okay, next. The person just asked about Lucid. So I'm going to show you Lucid, but I'm going to show you why I don't want to trade Lucid. So is this LCID? Yeah, let's see here. So Lucid is, I would like to see a company that is 365 days old. I want to see a year's worth of data. It's getting there for sure, but I want to see a little bit more. And all of this is nonsense. I mean, that doesn't show me anything about the stock. This is clearly hype. It just came right back up and came right back down. Lucid's going to be a cool car company, but let them prove themselves first. Day trade this. Go ahead and day trade it. That's my advice for what I would do with that. Oh, let's do Penn Gaming. Haven't done that one in a while. Okay, Penn Gaming. Yeah, they got the same deal. Wasn't Penn supposed to... Didn't Penn do something with gambling last week? I thought it was good news that came out about them. Maybe it's not. Clearly it's not. So moving down, let that thing cross over, because you're right now, the trapdoor is open on you. So we haven't seen a lot of trapdoors, but this is trapdoor open city. Let that thing cross over. Let the red line cross over and keep moving down. You're going to face, this is going to be a lot of support for you at $64, but you could probably get a run down there. Just trade it. Use your weekly stochastic. I mean, your daily stochastic. You'll run that thing down pretty well. Next, INCY after approving their drug. Let's see. INCY. I'm just assuming that I'm going to see a jump one way or the other, and I did not. So I don't know when the drug approval was. I would assume here, but I really have no idea. What it did do is it ran right up to its 100-day moving average and pulled right back down. And I also noticed a couple weeks ago it ran up to its 100-day moving average and pulled right back down. So clearly this thing struggles getting through the 100-day moving average. Let's look back here. Let's look into May. Even here in June, it was above the 100-day moving average for 4 days. Here it was above the 100-day moving average a little bit longer, but it failed the 200 and came right back down. So these moving averages matter, guys. Keep a watch on that. You got to pay attention to moving averages. What's up, Seth? Oh, fancy seeing you here. That's funny. All right, let's see here. Facebook. So Facebook is holding a very nice support level. I do not see this thing dropping much more than there, even on, what day was Monday? Today's Wednesday. Okay, so this was Monday. You even saw on Monday. This is a perfect example of when I say the plunger team comes in. I'm going to really zoom in here. This was Monday. So stocks fell. Of course, Facebook got smoked because Facebook's one of the fangs. It got crushed, came all the way down here. The world was going to end. And then at the end of the day, stocks moved right back up and they came up to here because the Dow and the NASDAQ especially was down 3% at one point, over 3%. It ended up closing down 2%, and you can see that here. It came right back down. This is tech, came right back up and recovered. So this candlestick, individual candlestick, is a perfect example of the institutions coming to the rescue and daddy bailing everybody out. Okay, let's see. MRIN. I don't think of... Oh, I recognize this. You know why I recognize it? Number one, I saw that this morning and I was like, what is going on? Okay, I don't know what to tell you here. Go and day trade this, up 90%. What do I look like? Stock Mo? I don't have kitty cats crawling around on my shoulders right now. Don't have a ticker for ASOS. Next. Tima short. Why don't we look at that? Oh, man, beautiful. Hey, if anybody's in the bid and ask, please tell me if you caught this. This is just beautiful. Great stochastic down. I mean, this is picture perfect if you caught this. I'm very proud of you if you did. So you crushed through, you blew through these moving averages. No issue whatsoever. You had really nice volume. So when I say I want good volume on a stock, let's say the average is down here, like it probably is with T-Mobile. And then I say I want good, consistent volume. I want good, like massive volume for 10 days in a row or something. And look what you got right there. That is what, when I say that in videos and when I say that on live streams, that's exactly what I want to see. So if you caught this thing, message me and tell me that you did, because maybe I have presents for you. But you got to show me proof. You got to show me proof. All right. Oh, Cisco. Somebody's talking about Cisco. Cisco long. Michael, what are you doing? Come on, man. Look at this. You are just trending down so beautifully right now. This is actually this is awesome. So draw a straight line across. You're holding some support, but man, you have a long way to go down here. Let this thing break under. Start making engulfing candlesticks down to 53. I mean, this is great. If you can get down to $53, you're going to go to $51 because you have that gap between the 100 and the 200-day moving average. Tons of selling volume over the last 7-8 sessions. This is great. You guys are finding some good stocks this morning. But Michael, come on, man. Don't go long on that one. All right, LABU for a swing trade. Joel, I'm going to tell you no, do not do that. But let me tell you why. This is a 3-time leveraged ETF, biotech ETF. So when I was day trading back in the day, 2015, 2014, 15, 16, that's what I did for a living. LABU was basically the only stock I day traded every single day. It was LABU and LABD, which is the inverse of LABU because you cannot go short on LABU. So instead of going short, I would just buy LABD and go long, and that's basically shorting this. But I love this because it was the volatility. Never, ever, ever would I stay in this stock overnight because this thing is insane. It moves 4 to 5 to 6% to 15% per day, but it's great for going in and capitalizing on day trades. So my opinion is use this thing to your advantage for day trading. Please do not be in it overnight. You see these just move. This thing just moves like crazy. Always has good consistent volume, which makes it a great day trading stock. But I literally made a living. I was making 6 figures trading this one stock every single day for 3, 4, 5 years, or 2, 3, 4 years, whatever it was. So, all right. Okay, let's see. DBX. Should I take my 45% profit on DBS? Yes, you should, because they are starting to trend straight down. They've had a hell of a run. They've played with coming back down, and they finally broken that level of support. You noticed this. So back in June, they did the sweet spot reversal. They made a move up, just moved sideways for a very long time. And finally, I take that back. It was probably Monday. Monday, they dropped below 80%. Take your profits on this. Be happy. To be honest with you, if it was me, I would be selling the position. I'm exiting. I made 45%. I made a hell of a trade. I'm not even taking profits. I'm just exiting my position and moving on. That's just my personal opinion. Fisker, sweet. Is this the car company? So they have, okay, I'm gonna tell you what this is. Let me just zoom out here. And this is hype. So I know it's hype because this, and then just this, and then straight back down. That's pretty much what happens to all of them. So this chart looks like the majority of financial YouTube channels on YouTube. The majority of financial channels on YouTube. That's exactly what that is. Hype is hype. All right, so you have a good looking trajectory up. I'm perfectly fine with that. Break through the 25-day moving average, run it to the 50. You can make a trade out of that. But you know what, man? I wouldn't trade this thing any longer than on a swing trading chart. All right, smash the like button for me, guys. That would be wonderful. Let's see here. Bitcoin. Does this thing get Bitcoin? BTC group. There's so many. Is there just like Bitcoin? This is Swiss. I have no idea. Well, it was fun while it lasted. All right, Fiverr. FBRR. They went for a crazy run recently, right? Oh, crazy drop. That's what it was. So they're going to fill the gap. For sure going to fill the gap. And you can see yesterday, they were trying to make a run. They got pulled back down by their 100-day moving average, which is no bueno. But, hey, you know what? It's going to be, with this kind of low volume, this is a hard stock to trade. In my opinion, I would avoid and go find something else, unless you really, really want to play with stops. If you want to play with stops, have at it. TIL swing trade. Let's see. TIL swing trade. Yeah, I mean, this is fine. You're kind of missing. Wait a second. No, you're good. You're kind of missing the. You missed a lot of it already, which is unfortunate. Don't add on something like yesterday. Make sure you get a full engulfing candlestick. The problem is with this. Is this biotech? Yeah. The problem is you get these long wicks on everything. That means that the price what you're basically getting is you'll fill out like this in, say, the morning, and then by the evening, you're like this. That means the stock price pulled back. Or you have like a long wick like this, and what this basically means is that the stock ran up on you, pulled back down, then came back up, and you kind of just closed the day in this range. So it was at this low at some point, it was at this high at some point, and there's no consensus. So that's what makes this thing a little bit hard. But yeah, GBTC. Okay, let's see. I have never looked at a Bitcoin chart, so this is history. This is American history. Okay. Oh my God. All this chart tells me is put your life investment in it and mortgage your house on it. That was sarcasm, by the way. Let me be very clear. If you mortgage your house, it is not my problem. I told you, I'm joking. All right. So it's so funny. We can kind of use these charts. I mean, yeah, we can. It's just this looks like a foreign stock to me because you just see these gaps all over the place because there's no consistency in the damn thing. So like if we pull up like an Alibaba or a Tencent or literal Nintendo, any kind of foreign thing, you're going to start seeing that these gaps are just all over the place. So yeah, I don't know. I'm sure you can do it, but all right, let's see here. Mo did a good job selling how he doesn't know how to check Bitcoin. All right, MO, the Altria Group. Gap down, the gap will eventually fill. Be careful with the stochastic. You're starting to get that teeter on you, and you're really struggling to stay through these moving averages. Not a big fan of that. You will hold the 200, that's for sure. But, you know, if I'm you, I'm just waiting for this stochastic, the daily, to swing back up and jump on in there and grab it and try to go fill that gap to the top side. I'm not a big fan of trying to force a trade on Altria Group anytime soon. Plus, they're pretty boring. Let's see here. I mean, they're a pretty boring stock. If you look what they've done, $46 to, I'm going to call it $51 with the exception of these like 10 days between March and today. That's pretty damn boring. That's a dinosaur right there. All right, what do we got? why don't we check ARK Innovation? Okay, so I'm sure if I pull up like a Tesla or something, it's going to look very similar. Just consolidating in this area, not really doing anything. To me, if you want to do anything with this, and I don't know why anybody the hell would touch this, but you can swing trade this. Mostly, it's funny. I would never say like swing a ETF, but this is a wolf in sheep's clothing, and this is called an ETF, but it's actually not an ETF because it's a scam. But for that reason, you'll get a lot of volatility on it, and you should take advantage of that. So if you want to do some kind of swing trade on it, day trade, whatever, go for it. This thing moves very nicely through the sweet spot on a daily chart, so go at it. Poshmark. Oh, this is new. Yeah, I don't do IPOs. I explained it earlier. Next, Wish. When you wish upon a star. Is this the same thing? When did they go public? December. So they're almost a year. Still, I just want to give it more than a year, guys. It's just a rule that I stick to, and that's that. Airbnb. It would be fun to short it with puts. Have at it. All right. So Airbnb, same situation, but Airbnb, I mean, this one just gets hyped nonstop on TV. All right, let's look at Alibaba. I mean, you're holding support at 150. But if you let's scroll back and just see where the next support level is. 148. We're gonna call that 152. Next one is 130. $130. That's your next support level. So we're gonna see what happens with that. Facebook is down 3% pre-market. I don't know. Why does everybody want to look at Facebook all of a sudden? Let's see here. Facebook. It's down 3% pre-market. Facebook defends itself. No, I have no idea. Facebook wraps up deals with Australian media. I have no idea why it would be down. But before you don't do anything at the open. Let it settle down. Wait until 10:06. See where everything settles down to. So the market's open right now. It gapped down here. This thing could very, very easily come right back up here this morning. So let this thing calm down until 10:06 and go from there. MRIN day trade, yeah, go for it. Can the market crash already? Ha ha ha. Let's see. I'll do one more stock and then we will be done for today. Okay, I'm going to do two more because I want to look at HPQ myself. And then I'll do one more for you guys. So HPQ, let's zoom it. It's holding a support level right now. If you even look back here, it's just that's just where it's sitting. The bad news is it's below all of its moving averages. The other bad news is your stochastic is pretty terrible on both sides. So if you want to do something in the short term, wait until this gets into the sweet spot. If you want to do something in the long term, let this thing roll up on you. It will do. This thing is going to be fine. I'm telling you it's going to be fine, but just be patient with it and move on from there. Okay, last one. Ooh, Regeneron. Let's do Regeneron. They're an exciting company. Okay, what a hell of a run. Ooh, look at that. Look at that. Big run, big dip, big run back up. So, Regeneron is kind of holding a support level. And I'm saying that because I'm just going to circle this and then I'm going to go back to my whiskers. If you look, that's what I just circled, all of that. It's just a cluster of consolidation. So it's kind of sitting at that level. In the long term, you're in this overbought area. I would not touch this thing until I made new all-time highs, and you're pretty far away from those all-time highs. In the near term, I might hope for a little bit of a rebound, just pop this thing back up over the 25-day, but I think based on this decelerating volume that I'm seeing, especially from the past month, you're gonna struggle with this one. So if you're in this thing, I'm not saying maybe this is a good time to take profits, not exit your position, but just take profits. But it just put some money in your pocket. Mo, you don't love the idea of shorting ARK. You know what? I don't, because listen, I don't really care about that it's Kathy Wood at all. Couldn't care less. It has to do with she holds a lot of tech, and tech is leading this market up. And her fund is solely based on what the Fed decides moving forward. She has no talent. It has nothing to do with anything. She is being lucky and she is being benefited and propped up by a Fed because she owns what stocks are moving the majority of the market. It's as simple as that. So me trying to short ARK or you trying to short ARK is you trying to fight the Fed. Do you think that that's a good idea? I do not think it's a good idea. So that is my stance on that, and you could take it to the bank. All right, guys, you have a wonderful day. I have a one-on-one session in 27 minutes, and I will see you guys in 23 and a half hours tomorrow morning right here on the morning show. Have a great day.